Good afternoon, everyone. Welcome to our Development, Construction and Project Management in Uncertain Times webinar. This is our fourth webinar in our COVID-19 Impact on African Real Estate series. Last week, we had a very insightful session focused on real estate investment implications across Africa. And this week, we'll be continuing the discussion with looking at the impact of COVID-19 on African real estate developments and what this means for developers, project professionals, as well as the broader African property market. I'd now like to welcome our speakers for this session. So moderating and setting the scene for the discussion is Nick Langford, Managing Director of Adair Estates. And our panel for today, Jeffrey White, CEO of Agility Africa, Tim White, Founder and CEO of Profika, Amin Musa, Partner at ALM Kenya, and Robert Gishoki, Director, MML, Turner & Townsend. Thank you all for helping us to answer, for taking part today and helping us to answer and provide insights into how we as an industry are navigating this challenging period. I would also like to take this time to thank our headline sponsor, Standard Bank, our series sponsor, Nedbank, and today's episode sponsor, Profika. This afternoon, we are pleased to welcome more than 750 registered attendees from across Africa and internationally. We encourage you to ask questions to the panelists via the chat function, and we'll do our best to answer as many as we can during the course of the session. We'll also be conducting an informative poll, which we encourage participation in, and we'll also share the insights to those polls post the discussion. I would now like to hand over to our panelists and to Nick Langford, who will be setting the scene and then diving into the discussion. Thank you, and thank you.
Thank you, Kafia, and good afternoon, panel, and good afternoon, everybody out there. So I think to set the scene, we're all in the same storm, but each of us are in very different boats, and we all have different experiences of this storm. And it's tough for a lot of us out there as we're experiencing and undergoing totally new experiences and having to make decisions which we don't really know what's happening tomorrow, let alone in the short term, long-term future. So the webinar is going to provide us all with some up-to-date and ongoing experiences from our very informed panel. They're dealing on the ground every day with construction and development decisions, and they're going to share those experiences with you. I've asked them to make some of the experiences as specific as possible, rather than generic, subject, of course, to confidentiality, whether client or internal. So what are we going to cover? We're going to cover the following topics. We're going to cover construction, projects on the ground, the challenges that people are facing right now, the type of decisions that need to be made by developers, how are we dealing with such issues as supply chain, and other problems. We're going to discuss how banks are treating developers and the teams on the ground. Are they actually working with their clients and borrowers? We're going to be talking about the professional firms, how they're changing and adapting to deal with this new situation. And we're responsible, of course, in our industry for many of the families and social issues, and they need to be addressed. And I would say also that in any rapidly changing environment such as we're experiencing now, it's really those of us who adapt the fastest and who anticipate the changing circumstances who reap the rewards. And I hope that this webinar will help you prepare for that eventuality. Last week at the webinar last week, we really discussed the different markets, and it's clear that some markets are going to be in troubled times for quite a while. Hospitality being the most obvious, and that can be affected maybe for weeks, months, and maybe even years ahead. But actually, I'm aware of a international chain of hotels looking to expand in Africa and particularly in Kenya. There is the money there. There is also Amazon around the world, a lot of opportunities, and obviously we've read a lot about their increase in deliveries. And it's also true to say that the Jumia and Copia have also, it's certainly in Kenya, experienced an upturn in business, and obviously we'll hear from Jeffrey about what's happening with agility. So we have actually in the residential sector, I know talking with the various parties involved, the Mivida Homes and Talisi and others are still selling plots. They're still selling homes even in this difficult time. And Centum have just recently launched a new housing project called 365 Pavilion Place. And ALP have a lot of local inquiries from local tenants at Talisi. And there are private money, private funds available to invest. So although it's difficult, we all know that, there are opportunities. And I think what I would like to try to do with this session is to get and encourage the panel to identify, yes, there are difficulties, how you deal with them, but what about the future of the opportunities? So without more ado, let's just talk about the first question. And the first question is really about the construction. What are the main challenges that the panel, whether as a principal or as consultants acting on behalf of clients, what are they facing on the ground with the construction? And what measures are you taking to limit any of the damages? And what is the cost implications? So maybe Jeffrey, ask you to start first with this one. I know you got a project in West Africa, and tell me really what it's like actually on the ground with this project and how you're dealing with it, and the problems you're facing, and the future as you see it over the next few months.
Hi, Nick, and thanks very much for API and Kafir for organising this. I think it's a very useful session. So we've, as Agility, as you know, we're building large warehouse, international standard warehouse parks across the continent. We've got 3 construction programs going on currently, one in Ghana, one in Mozambique, and one in Abidjan in Côte d'Ivoire. And about to start one in Lagos, Nigeria. But the 3 that are actually active just now, I think the first thing to notice very typically in Africa is it's a totally different scenario from each of the different countries as to what level of lockdown they're on, how much you can actually carry out work and what you can't. So in Mozambique, the contractor is still fully mobilized. People are moving around Mozambique from a work perspective very easily. They've seen a reduction in the number of workers available that is impacting their process. But other than that, the contractor is getting on more or less as normal. Ghana was, until 2 days ago, the total opposite end of the spectrum. They were on 100% lockdown. Workers couldn't get to site. They couldn't do it. That's now lifted, and the contractor is just remobilizing to come back into Ghana. And then Côte d'Ivoire sort of sits in between the two. So Côte d'Ivoire, they went through a partial lockdown. Contractors were able to move an element of their staff around. We, in conjunction with the contractor, agreed that we would have social distancing on site. So the plan, and it works, let's say, at 95% level. The plan is that all the individual workers, so we reduced the workforce by 60%, and the workers who are working are social distancing, so they all stay 2 meters apart. We test their temperature and do a medical on them each morning when they arrive to make sure that they're healthy and okay to go to work. And that's been working reasonably well. But the impact, I think, on certainly in Côte d'Ivoire and in Ghana has been a big slowing down of the actual construction process. Obviously, if you have much fewer workers on the site, then everything slows down. And that's from a contracting perspective. The other issue that's probably more black and white is with borders locked, you cannot get specialists in to commission equipment, to start up your generators, to start up your various pieces of kit that you're building into your warehouses. So that's a whole separate challenge where international travel restrictions have an impact on the project. And that, again, you have to work on sort of workaround solutions where the manufacturer agrees without his specialist on site, you're able to remotely commission his equipment with them on a video link, talking you through how you do it, and that doesn't affect your warranties and your guarantees, etc. So I think overall, there's been a slowing down of the process, not critically so, and hopefully over time we'll see contractors getting more access to site and projects getting back on track.
Thank you, Jeffrey. Robert, do you want to, maybe your experience in East Africa and Kenya in particular, with your clients, perhaps you give a range of generalizations and maybe pick on one or two specifics about, and maybe on the supply chain issues, and then you've got in Kenya, you've got the curfew. How does that affect labor, supply of labor?
Good, thank you very much, Nick. Similar to what Geoffrey mentioned, we're seeing different reactions from different sites and different clients. And for Kenya, which is under partial lockdown, whereby the curfew starts at 7 p.m. and is lifted at 5 a.m., most of our sites have remained open in East Africa, and they cut across most of the subsectors in real estate, that is from hospitality, commercial, retail. Now, we have several of the projects, believe me not, Nick, in hospitality, where the clients have gone and said, let's capitalize on this downtime and accelerate on the work and get as much as possible. So that has been a very good, positive element from some of our clients in terms of keeping the economic activities going on. We did see a bit of a slowdown in the first week, mostly because of the panic that was caused by the uncertainty or the lack of know-how in the local market as to how COVID is transmitted, how to prevent it. So there was a considerable slowdown of activities in the first week after registering our first case. But slowly by slowly, after the government started issuing directives and giving information on the transmissions, a bit of confidence came back, and we started seeing sites getting back to almost the mobilization levels that they were before. But what happened in the second week was confusion looming around a lockdown, and everybody was wondering, are we going to do a shutdown? So what then happened is supply chain started being affected in the second week. And towards the end of that week, when there was the announcement that there will be a travel ban. So what happened, anything to do with international procurement was immediately affected, and we started seeing notices from contractors, albeit not, most of them not supported by tangible evidence that there's been a disruption in supply chain. And then further to that, the government continued imposing measures of county lockdowns or restriction of movement from one county to the other. Now that is one that completely halted or disrupted the supply chain, because most of the materials that we use, especially for wetworks, that's a concrete, comes from different counties. So that has really affected the ability of the contractors to access these materials, and where they're able to access these materials, they're ending up paying tolls that have been imposed by the police on roadblocks. They're ending up having to pay people to facilitate the movement. So generally, we're seeing a ramp-up of cost, operational costs, and they are of a continuing nature. And every other day, we are monitoring them on site. I think we did a quick spot survey on 4 projects, sub-Centum projects, one from trade development and 2 from Uganda, and we saw that there is about 10 to 12% increase in the current increase on cost of construction materials, based out of the feedback from suppliers, based out of people who have ex-stock materials, and I think the trend is going to continue for this period as we normalize the supply chain.
Yeah,
Hi,
I'm also. Yeah, hi,
Nick, can I just ask all the panelists to switch off their audio when they're not speaking, because there's a bad echo happening currently. So if you're not speaking, if you can please switch off the audio, because there's just a bad echo happening. Thank you.
Okay, I'll turn mine on as I'm about to speak. So, I mean, I know you've got a project up, I think in Navashep, with the flower farms. Can you just explain how that's going? How are you dealing with the problems with your clients up there?
Sorry, was that addressed to me?
Yes, I mean, that's to you.
Okay, excellent. So I think we are acting on a number of projects in the real estate and the infrastructure space across a number of countries in Eastern Africa. And there have been a variety of challenges, but in some cases, even opportunities that we have seen. I guess in relation to the challenges we have seen, to give a few examples, one of our clients is developing a significant infrastructure project in an Eastern African country where they have several hundred people on site. They had to deal with a strike and riot situation, which is an example. We have had issues, as Robert has pointed out, where because of the inter-country restriction of movement, getting your labor force to the site has become difficult. We have had issues of being able to carry out factory testing in accordance with construction contracts, carrying out testing and commissioning on the ground where you need experts from outside our countries to handle that. Also where you need government authorities to attend testing and commissioning, give clearance certificates for real estate and infrastructure projects. We've not been able to get those, and we're trying to figure out whether some of these can be handled remotely using technology or not. So there have been a wide variety of challenges that our sponsor clients have faced who are in the construction phase. I think the other challenge in Kenya is, in addition to having national guidelines on the restrictions for construction work and the health requirements you need to follow, we have also had different counties issue different and sometimes contradicting rules and regulations about what can be and can't be done. So, for example, we have a acting for a significant project development in Malindi, and the Kilifi County gave regulations about restricting what appeared to be, a complete restriction on any construction and manufacturing activity. And in other counties, this has been allowed. So I think where you have state and local governments involved in countries in Africa, sometimes that lack of coordination has been a hindrance in being able to understand clearly what you can do and what you can't do from a regulatory perspective. In addition to that, our clients have had to deal with force majeure notices from consultants, contractors, subcontractors. So how you deal with that also, whilst you are trying to complete your construction projects within the timeframes, has certainly been an interesting challenge for all of us. But it is interesting to note, and I guess we will probably touch that on more detail later on, is there appears still to be activity in the market. For example, I know of 2 significant retail malls that would like to use this time as an opportunity to carry out remedial and refurbishment works on their retail malls, given the lack of activity. So they see this as a perfect opportunity to be able to do these works without causing inconvenience to tenants, customers, etc. But they're all trying to figure out, how do we carry out these works with these restrictions in place? So there are some interesting opportunities that are still available in these sectors. And I think those sectors that are early greenfield development still seem to be going ahead in terms of discussions with government, in terms of planning, in terms of design, etc. So I think there is a mixed bag of experiences we have seen.
Yeah, thank you. I mean, actually, that's interesting. So it's often about relationships in business, and clearly having a good relationship with the local authority to obtain the approvals will give you the opportunity to actually get on and get occupancy permits and the rest of it, which is required. Turning away perhaps from East Africa, don't want to focus too much on that. So Tim, maybe you can give us sort of a more Southern African kind of perspective on this, and how actually maybe how do you see the future a little bit as well with your clients? So it's all very, we know what's happening now a little bit with replies that we've had, but how do you see the next month or 2 months, and what is the impact on our industry?
So Nick, it's interesting. I mean, we've got projects under construction in 13 African countries at the moment, so from east to west, north to south. And each one of the projects has a different circumstance that's taking place. Obviously, as we mentioned, some of the countries are in complete lockdown, others are open. I think out of those 13, the 4 countries that are really seem to be the least affected at the moment is Cameroon, Mozambique, Zambia, and Tanzania. And I think in those the sites that we are managing in those countries are continuing. And the productivity is maybe a 5 or 10% impact, whereas obviously the other countries are in partial or complete lockdown, and we're seeing the impact of that of the lockdowns have been quite short term. They've been over a month or 6 weeks to 8 weeks. So we're seeing a lot of the notices coming through with the easing of the lockdowns expected in the month of May, hopefully. So really, what we've been looking at is how do we deal with trying to get those sites up and running. The last week or so, we've had a lot of stakeholders involved in those discussions as to when the lockdowns are actually eased, how do we get back onto site? What are the processes around social distancing? How do you actually structure your work breakdowns in terms of the construction process to try and ease the impact and try and meet those social distancing requirements? There are going to be additional costs for startup. We do see the fact that all the health and safety specifications are currently being updated and are going to have to be updated in terms of the requirement the contractors have to provide on those sites. So, we're talking about typically cubicle toilets and additional facilities for testing, different access control and security measures so that the temperature testing can take place. There's quite a lot of those aspects, certainly the PPE aspect of not construction PPE, but COVID-related PPE having to be provided by the contractors. All of that is going to have a cost. And of course, that means that the health and safety specifications are being updated, and our clients are going to have to obviously cover some of that cost to get the projects up and running. But far better to have that than have the project still locked up and closed down. So those are really what we're focusing on the moment. Is I think the industry needs desperately to get projects up and running. Even if they're at 80% productivity, it's better than 0%. So it's a real push from our side to make sure that happens.
Yeah, so it seems like the long-term effects of this are increased cost, and everybody wants to keep the site running. There are provisions in place. Looks like health and safety provisions are being updated as and when is required. So the most important thing is to keep people in employment, keep the projects going, and really the clients, I guess, or the banks have to foot the bill. Okay, in terms of Jeff, just going back to you, a quick question really on your rollout, because you've explained what the issues are on site, but you've got a rollout program, I know, across Africa. And how do you you're going to stall this? Are you going to carry on? Actually, have you got increased demand? How do you see your rollout program developing over the next few months? And
so as Amin knows, we're currently looking for a site in Nairobi that we're negotiating around. I think the macro and our investment program was always a 10, 20-year sort of vision to build a network of quality warehouse parks across the continent. And those are aligned not just with logistics and distribution, but with local manufacturing, e-commerce fulfillment, and just the movement of goods to a local production environment rather than necessarily globally. And I think logistically we're seeing and we're expecting that globally people will want their supply chain to be more robust, their goods to be nearer. I think there's going to be a spate of governments and private sector companies saying, actually, we want to diversify our inputs and we want to have more local production. So from our perspective of just supplying warehouses that are the platform for packaging, processing, local production, storage, distribution, we're actually quite bullish on the potential for what we're rolling out, and as a result are keen to continue doing the rollout. The question in the short term, not the medium and long term, is how long does the lockdown and the lack of economic development actually go on? And then secondly, from a global perspective, how long is the impact of a global recession, which is clearly sort of triggering, going to happen? So is that a 2-year, 3-year, 5-year impact before global growth starts growing again? But I think very specifically looking at the African opportunity, we're still very bullish that local manufacturing, packaging, processing requirements and the infrastructure needed to do that, which in effect is what we're building, is going to be quite a strong demand coming out of this period.
Yeah, actually talking with ALP, they were saying actually that there is strong and increased demand locally, maybe not so much internationally. But the local demand is increasing, and I think that's what you're saying. Is that's where the future holds for your industry across Africa. And
we always saw one of the we always saw one of the pillars as local manufacturing, which we thought was happening globally anywhere, where big companies that used to produce 50 million units in China were actually changing their business model to say, let's produce 500,000 units in Kenya, and with the IoT and sort of better technology, we're able to batch produce and be much more nimble in relation to market and local cultural requirements. So I think that trend that was there anyway, and one of the sort of pillars of our investment strategy, is probably going to just become much more rapid in moving forward.
Well, good luck with your search in Nairobi, Jeffrey. So, moving on. Maybe a question really to be answered maybe by Amin, but there are obviously some challenges on the ground on construction sites, and there's the whole issue about the force majeure clause. So, how do you see the contractor and developer relationship? Where's the friction, and are the relationships strong enough to be able to get through this together? So, I mean, if you could start that, please.
Sure. So I think on the force majeure side, we have seen impacts right across the sector. The obvious one to start with is the employer-contractor relationship. And then there is the contractor-subcontractor relationships, and then the relationships with the consultants. But then down the chain, there are force majeure issues that are occurring between buyer and seller whilst these developments are under construction. There are force majeure issues developing between landlord and tenants in the retail space, and in a way they are all interlinked. So I think as a starting point, from a purely legal perspective, under the common law position, it's important to note that common law countries, which are primarily Anglophone countries, don't have a recognition of the concept of force majeure in law. And therefore, the concept of force majeure can only be relied on if your contracts expressly provide for it. So where your contract is silent on force majeure, from a common law perspective, you would have to rely on the concept of frustration, which is a much, much more difficult bar to achieve, because you need to effectively show an impossibility to achieve the terms of the contract. But a number of the significant construction contracts in the real estate space, in the infrastructure space, will tend to have force majeure provisions in them. But like I said, across the chain, some contracts for supplies, for example, may not have it. And then you have an interesting interface issue where contracts are not back to back. From a purely practical perspective, I must admit, in terms of the issues between employer and contractor, both in the real estate and the infrastructure space, for now, I have practically seen people actually getting together, finding practical solutions between employer and contractor, rather than triggering dispute resolution mechanisms as of right now. Obviously, it'll be interesting to see if the lockdown and the pandemic persists, whether the current mood of cooperation, which certainly exists today, will continue. I think employers are, as was stated earlier, looking at variations, extensions of time for now, in a much more practical way. And I think both parties, from what we have seen, are being very, very commercial about their decision making. But I think when you go further down the chain, especially in the real estate space, and especially in the retail sector, the relationship between landlord and tenants, I think, are getting more strained from what we can see. Whilst both parties are trying to be practical, force majeure issues are becoming more challenging, especially between landlord and tenant on the retail real estate sector space.
Nick, if I can just add there, I think I mean spot on. You know, across all of the regions we're busy, and I think the general intent from the parties is to come to some sort of amicable solution as best you can. You know, generally speaking, across the different construction contracts, the force majeure clauses are quite weak, and I think that has that also leads to a lot of interpretation if you do go contractual, which is actually going to pick up. You know, it's going to take everyone's time and effort to try and get through that grey area. So we're seeing a lot of practicality being provided by the parties, certainly by the agents, by the engineers, the principal agents ourselves, and certainly between the employer and the contractors, to try and find some amicable solutions. But, you know, as Amin said, the impossibility relates to also not just what's currently happening, but whether anything could have been avoided or or the situation could have been foreseen. So there's a lot of interpretation around that. And I think, you know, the one challenge though is that if the contracts are suspended and the contract is followed to the letter, you then start going into termination clauses kicking in after a certain period of time. So one has to be quite cognizant of the impact later on down the line if certain things are brought to play. That's just one lesson learned. And then I think the other thing is we've actually a couple of new projects that we're working on at design and tender stage. The clauses are all being rewritten. So these lessons are now being put into motion into quite robust force majeure clauses into the new contracts.
Nick, if I can add on it, for Tana and Townsend, one of the things we foresaw is the confusion around whether this pandemic is a force majeure event or not. And because of the varying nature of our contracts, what we went ahead and did is to try and review all the contracts and advise clients and contractors just before everyone started jumping the gun. We have observed some contractors who are using this as a get out of jail-free card, and everything that they have not done even prior to COVID period, they are attributing it to the COVID. It's been our constant communication to them that even if it is a force majeure event, the onus will be on them as the claimant as to how this is hindering their ability to execute their services as per contract. So that has to be treated on a case-by-case basis on each and every project. And for clients also, we have been urging them to not take advantage of that clause in terms of cornering a contractor, but more foster a conversation around how best can we be able to support you as a contractor to ensure that you can keep the activities running for as long as possible.
Okay, thank you. In terms of the other party in all this in the construction is the bank, and maybe you can just tell me how you are responding, or how your clients are dealing with the bank. There's if for the requirements, effectively the construction cost is going up. Let's face it, and the programs are going out, so it's going to cost more to deliver the projects that are on site at the moment. If the client has a bank lending on the facility, clearly you're going to have to either extend the loan, or the client's going to have to put more money in. So what's been the approach of the banks so far? Robert, do you want to take this one? Is that please?
Yeah. So out of 4 or 5 of our projects that are funded where they are accessing debt from financial institutions, chatting to KCB, chatting to StanChart, and chatting to Barclays as to what they have observed in the last 4 or 5 weeks, the common theme was coming out is everyone is going back to renegotiate their facilities. Some are coming with a proposal to waive on interest, others a proposal to waive on any payments until we get through this period, and some just a renegotiation of the loan terms. And the approach for the banks has been very consultative for 2 reasons. One is to protect the level of to protect their business and ensure that they don't end up with very many non-performing loans. So that's why they are encouraging the consultative process. And 2, also the government has put in place directives, and I would welcome Amin to chime in on this. Government has put in place some directives to protect the consumers, such that if you're defaulting on a loan because of the current conditions and all that, there's sort of a softer landing that the government has encouraged for financial institutions to give consumers to ensure that they can cushion them during this period of time. So what the banks have been responding to, and one from KCB was saying, is they have given some sort of an extended period of or waived interest in the next 3 months for some projects. They have gone to a point of sort of discounting the amount of repayment that needs to be paid and observe it, but most of them are capping it between 3 and 6 months to enable them give both themselves as well as the facility holders time to observe how this unfolds. But to answer your question, is they're listening, and it's a consultative process which is being taken on a case-by-case basis.
So it sounds like there's a constructive approach anyway, in the short term. I mean, as we all know, there's a contract, and whilst you get around it in the short term through your negotiation relationship, it can be still there as a contract.
One other comment they mentioned is that for the ones that are continuing on, they have noted March was not so much affected, but for April, they are foreseeing a reduction in the drawdown amounts because of the reduced productivity on sites, which is understandable.
Yeah. Okay. Amin, do you want to just comment on that as you
Sure. So I think
Robert?
we've been assisting a number of these discussions with lenders, and I think the simple point to make is that if you want to have a sensible discussion with your financiers, the robustness of how you're dealing with this issue from a legal and a commercial perspective is critical. So on project finance transactions, sophisticated lenders want to understand, as was earlier pointed out, is there a force majeure event? Can you show the causation? What mitigation issues have you taken? What are the cost implications? What is the risk allocation of the cost in the construction contract? Who is bearing what? How are those issues having an impact on your financial model? How are these issues impacting your insurance policies? What is your ability to claim under your insurance policies for some of this? And so when you put together a robust legal and commercial package for your lenders at the starting point to have a discussion about potentially extending tenors, increasing amounts of funding on a short-term basis, etc. I think it is critical that you're able to provide that robust package to get on the right footing. And where we have seen that kind of package being provided to lenders for now, I think the conversations have been much more fruitful.
Okay, Tim, do you want to add anything, or everybody said as much as you need?
Nick, yeah, just maybe to add a little bit. I mean, we're seeing more of a wait and see type of attitude at the moment, I must be honest. Because it's only been really an impact of 4 to 6 weeks, there's a lot of uncertainty about how to repackage the loans and what the impact will be. So there's discussions taking place. There's certainly discussion around interest-only repayments and capital repayment holidays and things like that. But very generally, wait and see attitude for now.
Okay, thank you. Moving on then, on the slightly different subject, but clearly we're all real estate professionals in one capacity or another. And in a time of change like this comes a lot of pressures. So maybe Robert and Tim can lead on this, but you run big organizations, and basically you're selling time of people. And in a change environment like this, you've got to adapt pretty fast. So you got to, as Robert, you and I talked about before, you got to reinvent yourself to suit the times. And so what are you doing about that? You're pretty busy at the moment. Tim, you alluded to the fact that you're helping your clients and renegotiating and construction contracts. You're redesigning almost some of the construction contracts that are coming on site in the future. But how are you dealing with the staff? It's a difficult time. Let's hear your personal experiences, please. So, Tim, do you want to start?
Sure, Nick. Yeah, so interestingly, I think, when I chatted to my group exco last week, the guys are all flat out busy at the moment. And interestingly enough, I think with the fact that we have these type of interfaces and Zoom meetings and you're not traveling from one meeting to another, you actually get a lot more done in terms of the non-construction related activities. So, we're always in different cycles with the variety of projects we manage. We do a lot of pre-development management for our clients, so greenfields developments, master planning, really getting those feasibilities to work and the mix of use together. So what naturally happened over the last 3 to 4 weeks is the teams have been really focused on even taking that extra step to help our clients get across the line with their developments, to get them to feasibility stage and actually package them for shovel readiness, if you like. So there's been a little bit of a focus. The construction teams have moved more onto the pre-construction work. The pre-construction and design guys have moved on to more of the pre-development work, and the rezoning aspects, the infrastructure, engaging with whoever we can. And I think also re-looking at developments. Certain things that were designed 3 or 4 months ago, clients and construction consultants and planning consultants are re-looking at those to say, well, what are the impacts of COVID, and how should we be readjusting our concepts for mixed-use developments and the like? So that's certainly having an impact. So again, I think our biggest thing is to try and push to get open and get things going from that perspective. But the focus has just shifted in the stages of a typical development to the earlier stages to try and get those actuated and ready for development.
Do you see there being a realignment of your services that you offer, or a different proportion? I mean, or do you think you're going to be continuing the same services in the next 12 months from now?
So that you're opening up a can of worms here, Nick. I mean, I think just even pre-COVID, there were changes in our industry coming, make no mistake, in terms of more turnkey and single point of contact type solutions. So rather than a myriad of different consultancies, our clients across the continent are looking for one check to pay, one responsible party, etc. So I think that was an impact pre this pandemic. That was changing our industry to a degree, and I think maybe that's the situation is fast tracking that in terms of bringing together services, so being more cost effective for our clients, adding more value, and taking some of the hassle factor away from them for dealing with the whole lot of different independent parties. So that's certainly there. I think the development management work that we were doing previously has definitely picked up from that point of view. So yes, there'll be a lot more solutions thinking around the typical aspects of what we do. I mean, if we open up, each and every sector that we're working in, retail is going to change. Jeff's mentioned the e-commerce and the logistics aspect and the drive for cold storage. We're seeing a lot of that. The food distribution and things like that is growing. So we're going to have all these different aspects. Each sector is going to change, and each one will be different. And we're going to need to react to that and provide services for our clients to meet their needs in each and every sector and in each and every region.
Okay, Robert, I know you're addressing the issues in the office. Can you share some of those, please?
Nick, to be quite honest, it's been a tough three or 4 weeks trying to get everybody on board on what is happening and sensitize them as to how the business is doing, how our revenue is affected, how our clients are affected. And in Townsend, the people are the heart of the business. We really value our people and we want the best for them. So besides putting in the measures to protect them on sites and their exposure, the next conversation we had with our people is a candid conversation around the effects of COVID on our current projects, whereby some of them were closed down. We had a chain of restaurants that were doing fit outs that had to be closed down because the lockdown was affecting their businesses directly. We also had some international projects whereby their governance structures were in a way that only a client representative can make some calls or some inspections or some directions on site, and they had to be expatriated out. So some of those projects stopping rendered some of our people not fully utilized. But the good thing that we did at the beginning is to have very frequent consultative meetings with our team to make them understand that this is affecting each and every person, ourselves, themselves, the clients. And we got a very good response back from the team in terms of understanding the situation. And to summarize some of the measures that we did is on the people who are not fully utilized, we encourage them to take their annual leaves so that they can take advantage of this slow period or this partial lockdown period. We also encourage the ones that were also lowly utilized to take a salary cut and ensure that because we are working remotely, some of
Robert, we seem to have lost you, but maybe you were cut off by somebody. But anyway, I thank you for that very frank answer, actually. Moving on to a different subject. So Jeffrey, I'd like to bring you in because take a more broader
having these conversations is as opposed to when you want to lay off someone. This one is it's an honorable disengagement as we all observe what is happening on a day-to-day basis, so that if the situation picks up, we can quickly re-engage and it's going to be business as usual.
Robert, thank you. We missed about 30 seconds of your your talk. But thank you very much. That was for that frank, honest answer. Just moving on. So Jeffrey, bring you in again. So the IMF is, reporting a negative growth for the next 2020, and I guess we're not sure really. Well, actually, they're forecasting a bounce back in 2021, but obviously that's pretty uncertain. What is your idea? How does that impact your own view on future projects and investments in the continent? Not just for your own business, but generally, what do you think the impact will be?
I think one of the great drivers in the last sort of 5 to 10 years of foreign direct investment into Africa has been not just the African opportunity, the urbanization, the size of the workforce, etc., but actually driven by a slowdown of growth opportunities elsewhere in the world. And I actually think there's a real opportunity that as you come out of the COVID and the economic sort of downturn that's going to be triggered by COVID, that again will actually be a trend that's enhanced. I think more companies will be looking for new areas for growth and opportunity. And I think the fundamentals for Africa to be the food basket of the world and get its agricultural even more significant in global terms, to become a manufacturing center, not just for the Continental Free Trade Zone in Africa, but actually as a global competitor in manufacturing. All those opportunities are still there. So my feeling would be that subject to what happens in the next sort of month, 2 months on the ground from a medical perspective, which seems to be building slower than people had initially expected, and that's a whole different conversation. But assuming that Africa comes out of it relatively unscathed in the coming months, or less scathed than other countries, I think Africa's well placed to actually see some economic upturn. So as the IMF says, 2020 is the first recession in Africa for 25 years. But they themselves are predicting that'll then bounce back to 4.5% growth in 2021. And I think an awful lot of traction can come back to the African continent.
Yeah, and I think that it's likely that because the economic effects of COVID-19 in Africa are relatively higher economically for the individual. If you like, the forces will decide whether to break out of the lockdown and get back to the new normal will be very strong. So certainly in Kenya, and I believe that it will be back even before Europe. Talking today actually with the World Bank, so they're predicting, back in, an optimistic forecast that we'll be back in Kenya in July with international travel and get the businesses back and up and running. And as you say, having a more, if you like, the manufacturing and agriculture and the food program in terms of food security for each country will be a requirement going forwards, and less reliant on global trade. In terms of,
and I think again, it's driven by, Africa has an incredibly young population, which hopefully is more resilient to COVID. Plus, also there seems to be more and more sort of understanding that whether it be malaria treatment or BCG boosters that have been given to children, etc., that there might be a level of immunity across the continent that hopefully mitigates an element of the impact. So I think there's an awful lot of variables just now on timing, on how severe the impact's going to be. But I think underlying that, governments in Africa understand that 60% of the population lives on daily wages day to day. So the reality is there are other economic criteria, the economic pressures to have your economy working are actually incredibly strong.
Yeah, agreed, and I think we'll be back sooner than Europe and America actually. In terms of being more specific, there is tendencies. We try to examine the kind of short-term issues that we're dealing with here, and on the ground, on site, and I hope we've demonstrated to the audience that actually life is slowed down. It's a bit more expensive, but it is actually continuing. And but in terms of let's sort of take a 12-month period, and I'm a great believer that in times of change, you adapt faster. Those who adapt faster take the rewards, and we're all pretty inventive. And being in the real estate industry, we adapt, and also we're pretty optimistic about life and the future. And I think there will be, and there always is. What tends to happen in a situation like this, actually, it's just accelerates a change which is already happening. So you already having e-commerce, that this will just accelerate the change, and the driver towards distribution and online retailing as being one example. I also think, and perhaps it'll be explored more detail in next week on the webinar about serviced office, about office accommodation, that actually there will be a drive towards serviced office, more flexible leases as companies seek to ensure that they have an office, because I think we all believe that actually this is all great, but actually you do still need an office environment to generate energy and enthusiasm and ideas. There will be sort of a lot of opportunities, I believe, but maybe the panelists can just summarize in the last few minutes, what does they see as the optimistic forecast, and how do they see their businesses adapting to the changes. So I mean, maybe you're in the legal profession, so how do you see your business, and where do you see the opportunities in the next 12 months?
Sure. So I think obviously the one unknown is the extent of the from a purely health perspective, the extent of the pandemic. But on the assumption that we can get to some reasonable opening up of economies, I mean, to give specific examples, for example, private equity firms that are that focus on emerging markets and Africa specifically have plenty of dry powder, so as to speak, and are frankly looking for deals. And I guess the one possible opportunity, both in real estate and transactions generally, is whether in the short term valuations will be impacted, whether it is on land or other businesses. And I do know a number of these entities are looking for opportunities that they can bounce on if valuations come down. So in real estate, for example, in Kenya, if land prices are affected in the short term, I believe there will be opportunities in a number of areas. As we speak right now, we are working on 2 very large social housing projects. In a Eastern African country, we're looking at a $110, $120 million mixed use massive development over there as an initial phase development. It was earlier mentioned transactions for Centum Real Estate, Mevida, GTC, that we're all acting on, are frankly going ahead in terms of sales, construction, etc. So I think for those investors that have a long-term, 5+ years outlook for this continent, there is plenty of dry powder. And if valuations in the short term are impacted negatively, there will be opportunities to put that dry powder into use and get sensible value transactions. In fact, to a certain degree, when we were at the growth and economic peak, it was valuations that was resulting in a slowdown of transactions because of the gap between buyer and seller on what's an appropriate value. I believe that gap will be narrowed and hopefully allow for further economic activity and increased transactions. But all of this is purely subject to the health issue being dealt with.
So, Tim, do you want to give us your view on this?
Yeah, thanks, Nick. I think, we're across quite a few regions and quite a few service lines. So I think there's lots. If I can talk perhaps short term in terms of the impact possibly in the hearts and minds of people and the impact of certainly the workplace. I think there's been a lot of discussions and webinars around the occupier workplace and what that will look like. You mentioned co-working earlier. Interestingly, a lot of thought at the moment is not really around co-working necessarily, because obviously co-working means you're interfacing with other organizations in one building, but more around flexible working and being able to flex from home and work, but still having a head office to go to. And then the move from open plan to cellular, already the discussions had started end of last year around global trends. The whole trend had gone cellular to open plan. Now it was about being more productive in cellular offices. This has just added a little bit more impetus to that to say, well, now people want a little bit of social distancing, if you like, and their own environments and ways of integrating within the office place. So I think there's going to be impacts on the workplace that we'll need to react to, certainly. But on the investor side, on the property development side, as we know, Africa is very different to Europe. And, we've got so many different factors that we need to look at unrelated to COVID. The economic situation, certainly urbanization. Europe doesn't have the benefits we have from urbanization in terms of driving property investment and development. People want to travel less. They don't want to, necessarily have to travel long distances with lots of people in public transport. So accommodation near your place of work it's always been there. It's just going to gather a little bit more impetus. So, that from a residential perspective is going to add some thinking. Last year, the Urban Land Institute did some research on the amount of investment and property development that's going into the various sectors globally in the major cities around the world. And out of the top 12, 7 of those were residential linked. So either high density, retirement living, student accommodation, etc. So if you look at that, 7 out of the top 12 sectors are residentially linked in terms of investment and development globally. So it tells a bit of a story. Jeff will be happy to know that logistics was in the top 10. But one of the other ones that was in the top 10 as well was healthcare. And a lot of investment going into healthcare. We've seen the last 2.5 years already a huge uptick in healthcare, certainly in West Africa and Southern Africa on our projects. And I think, again, this is, both private and public healthcare. Again, this is going to put a lot more focus on different ways of getting to the populace in terms of providing healthcare services, which will have an impact on the property requirements. We're certainly looking at that. I think the other positive sort of sectors, if you like, or growth areas is on the data centers and connectivity. Again, that's, while retail may be a little bit depressed, certainly we're seeing an uptick on the fact that we need to be more connected in Africa. And for that, there needs to be the backbone to provide that connectivity and obviously the data center on the development side. So lots of new data centers coming up. So, again, I think it's a re-gear and a flex into other areas and other opportunities. But the growth will be there in our view.
Sounds like you're going to be busy. So Robert, where do you see MML going in the next 12 months and the opportunities? You're on mute, Robert.
Tim has articulated very well on the subsectors that we expect to see some opportunities. One, being a Pan-African business, whereby in China Townsend we have regional hubs which are led and run locally. One of the opportunities we see is the ability to be able to support clients who cannot be able to travel as much as they used to travel, and ensure that their projects are running smoothly, and also with the adoption of technology and in projects. Even who would have thought you'd run a site meeting through Skype. So with these changes in technology, we see some opportunities in terms of remote support of clients who have remote projects in various areas. One of our clients did ask for how we can be able to support them on virtual tours in terms of inspections, so that they do not have to fly in people in and out. So businesses that are structured in a way that the localization is in the core of their service offerings, and you do not have to move people from here to there, are going to be in a position to offer a lot of, are going to be in a position to pick up a lot of these opportunities. And at the beginning of the call, we mentioned local manufacturing. We will have a huge gap in the supply chain, in the sense of either through backlog of what we normally import, or the unavailability of the materials that we normally import. So we'll have to fill this gap with local manufacturing. So logistics and capacity building for the local manufacturer will also be another area whereby we'll have opportunities, as well as transport in that matter. So good times ahead. To be a bit challenging, leaner teams will be required, but we will get through it.
I've got a question specifically for Tim. We're getting questions from those online. So this is from France Duplessis, and it's a question to you, but I guess everybody can listen and they've got a comment to make as well. So the PowerPoint presentation circulating in the media at the moment states the 5 phases of lockdown relaxation in SA. Construction works are only listed in phase 5 due to the high risk of transmission in our industry. Who are the role players in South Africa engaging with government to come to agreement on the reopening of the industry? And what are the measurements currently, or measures, I guess, currently being discussed to minimize the losses of the past 5 weeks, e.g. shortened builder's break in December? There's a bit of an echo online, so I think you should just make sure we're going.
Okay, am I on? So France isn't one of the Profica team, so they're not going to be in trouble, which is great, for asking a tricky question. But, you know, in South Africa, we recently recently had sight of the government's approach in terms of a risk-adjusted approach to phase an integration after, or ease the lockdown with a phased integration of various sectors. And interestingly, they did an assessment of which sectors provided what level what each sector provided to GDP in South Africa, and then they looked at what each sector provided to jobs. And interestingly enough, and this is hot off the press from yesterday, basically, interestingly enough, construction was not a big provider of GDP and not a huge provider of jobs. I mean, manufacturing was right at the top, retail wholesale was right at the top, but construction was sitting in the middle. And then they did a risk around the spread of COVID and obviously the ability for social distancing. And again, you know, construction wasn't deemed to be, it was deemed to be sort of in the middle. So now you've got a challenge. It's not providing the most to GDP, and it's not providing the most jobs, which, I mean, I find very interesting. And at the same time, it's quite risky to open up. So that was really the view that was put forward by government. This is a government document in terms of that. So from our point of view, I sit on the executive committee of the Association of Project Managers in South Africa, and our ExCo with our president has been very involved in engaging with government. We've been sitting in sessions with the Minister of Public Works, the Director Generals, the Deputy Ministers, and also with the various MECs and Department of Health heads of department to actually talk about construction and talk about how we can mitigate those risks and how we can get those projects up and running. So that is an ongoing process at the moment. I mean, my personal view is that I'm not sure what data is behind that assessment, because a lot of manufacturing, for example, provides the construction industry. And if construction's not going, then manufacturing is obviously being impacted as well. So I think I was very surprised by those figures, and it would be good to understand the background to that. But there is intervention taking place by the private sector. and by the various associations, professional construction consultancy associations, directly with government. So one of the positives, I think, coming out of this is going to be that this situation has forced the public and private sectors to come together a little bit more than we were. And hopefully it can continue into the future as well, and we can engage and add value in a more integrated fashion.
Okay, it's another question, is more general. So this is about some of the tax changes that have been brought up into, certainly in Kenya, where you've got a reduction in corporate rate tax and you've got a reduction in VAT, 16 to 14%. What does the panel think? What do we think about? Are these real? Are they actually going to make any difference? Do you factor that into your calculations? Don't know who wants. Maybe maybe you could take that. Do you think that's going to make any? Is it sufficient? Is it too short term?
So I think there have been a raft of tax proposals that have been put forward. I think some of them, as you've mentioned, will have some impact, positive impact, but there are a number of tax proposals, sadly, in our view, that will have a very negative impact on construction and development. So, for example, for certain infrastructure projects, there used to be exemptions or reduced taxation in relation to withholding taxes, in relation to capital allowances and depreciation. A lot of these currently are proposed to be removed, and if that is the case, then large-scale projects could be negatively impacted by some of these measures. So I think you have a couple of tax measures that will help in some way, like the VAT, etc. But there are a whole raft of measures that, in our view, can have a significantly negative impact in a whole host of sectors, from manufacturing, hospitality, infrastructure development. So I think the governments, and especially from a Kenyan perspective, on one hand, are trying to balance how do you stimulate the economy. But I think the bigger problem a number of these countries that are having is, how do you deal with the significant reduction in tax collections over the last 4 to 8 weeks? And unfortunately, some of those reactions by government, in our view, will not support development in the medium to long term. So we are actively lobbying government, parliament, to be very careful about some of these measures. We do understand that they have a terrible challenge in balancing their books right now. But any rash decisions on increased taxes at this stage, especially on sectors like infrastructure, hospitality, manufacturing, in our view, would be disastrous. But those are frankly under consideration right now and being debated by Parliament.
Yeah, it's an interesting, very interesting answer, because taxes, I think there's short-term and long-term issues here, and clearly the diaspora, who are not working particularly in the hospitality industry abroad, the Kenyan diaspora, are not returning the funds they were on a month-by-month basis, $150, $200 million a month. Those are not coming in anymore. That's causing pressure on the Kenyan shilling, which is now, I think it's at 107 this morning, so to the dollar, and that has a lot of knock-on economic effects. But Jeffrey, if you're looking at doing an appraisal of your project in Kenya, for instance, or elsewhere, do you look at the taxation, VAT? Do you consider these, or do you consider, as Amini is saying, that actually there may be more taxation and therefore might be a short-term benefit, but a longer-term problem. Do you how do you deal with that in your appraisal?
So again, it's a bit of a moving feast currently, but generally I ring Amin and ask him for an answer. No, so the reality is you do it view by view, and there are pros and cons. But when you're investing on a long-term infrastructure, as real estate mainly is, you've actually got a window of time to make your returns that you have to sort of run with the highs and the lows as they come along in the tax environment you're in. Obviously, part of your initial evaluation for any foreign direct investment, and to hit your investment threshold, you take into account the incentives that are available for, I mean, in our case, it's a $250 million investment per location. So, I mean, that's a big amount of capital coming in as a project into each of the countries we're going into. And we negotiate with the investment promotion agency. We look for the best tax regime we have. But on an overall basis, your business has actually got to be viable above the sort of tax incentives anyway to make the investment worthwhile.
Okay, I've been asked to wrap up by Kafir. So I think I'd like to say that we've covered a lot of topics. I would like to think that they're interesting and very informative. I think we've been very frank with your assessment of life as it's going on at the moment in all the countries that we're working in Africa. But whilst it's hard and it's tough, in summary, there are a lot of opportunities. We will reinvent ourselves. There will be a post-corona world. It'll be normal, but it'll be a normal post-corona. It won't be a normal pre-corona. And we will adapt, and we'll make sure that our industry thrives going forwards. Also, think that and something that's come out of this talk is that and our industry is very good at it, is actually establishing the relationships with banks, clients, and developers, and the strength of those relationships sees us through the tough times. That's going forwards is the recipe for a success of the future. So, Kafir, I don't know if you're going to wrap up, but I think we're done.
Yeah, thank you. Thank you, Nick. And thank you to all the panelists. Amin, Tim, Robert, Jeffrey, thank you. That was a great discussion. And thanks, Nick, for moderating as well. We're going to wrap up here. So I'll ask the panelists, you can start switching off. And for our audience, obviously, thank you once again for participating. We're continuing our series on to next week, where we'll be looking at the future of the workplace. And once again, we thank both our audience as well as our sponsors, our headline sponsor, Standard Bank, and our series sponsor, Nedbank, and for this episode, the episode sponsor, Profika. So thank you once again to the panelists, to the audience, and to our sponsors, and we'll be in touch next week. Thank you.